Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks are gapping higher or lower at the open, and the opportunity is for traders that can identify a specific price level where stocks will first be drawn to and then have a price reaction from in the other direction. The second part of the course teaches the gap fill trades. When stocks do gap higher or lower at the open, they leave what's called an open gap. At some point in the future, those open gaps will be filled. I teach traders how to track them, and I teach traders how to trade them. Not all trades are created equal, so it's very important to understand which trades are viable depending on how the stocks come into these price levels and when the stocks come into these price levels. The other thing I do is give traders an opportunity to get my gap trades each and every day sent to them at 9 o'clock in the morning, 30 minutes before the markets even open for business. Here's a copy of the email that went out to traders this morning at 9 o'clock. As you can see, it arrived at 9:01 a.m. Today, we had 6 potential gap trades on the board. We had ALV, eBay, ZTO, Colgate-Palmolive, which is CL. We had Capital One, COF, and Synchrony Financial, SYF. Only one gap trade so far today hit its gap level, and that was COF. When stocks do not come into the specific levels that we calculate as the high probability trade levels, we take them off the board. We're only interested in trading the highest probability trades possible. Now, the good news is next week we have tons of S&P and Dow related companies that are going to report earnings. So we're going to get a lot of movement from a lot of companies next week, which should provide bucketfuls of gap trading opportunities in the morning. The one that came into its level today was COF, Capital One. I say gap higher. Resistance levels are $86.49, $88.95, and then even a third target of $91.70. Stop and profit target is about 40 to 70 cents. These are minimum profit targets. Let's go over and take a look and see exactly what happened to Capital One Financial when it came into the $86.49 level. Before we do, I want to make mention of the gap fill trades. I give a list of all the gap fill trades that I track for all our traders each and every day. I give them about 30 stocks that are close to their gap fill levels. Some days we get some that hit their levels, and some days we just don't get any gap fill trades that hit their levels. But sooner or later, these stocks will come back to fill their gaps. So we want to pay attention because you never know exactly when the opportunities are going to hit. We're back on the chart of Capital One, and I took it down to a 1-minute chart because this trade happened relatively quick, and I want to show you exactly how it developed. The stock closed yesterday just below $81 a share. This morning, the stock was gapping higher and opened the day at $85.04 and began to trade higher. Our level that we identified where the stock should A, be drawn to, and then B, have a price reaction from in the other direction was $86.49. You can see what happened when the stock came into that level. It did have the pullback we were looking for, making a low of $85.85, and this all happened within the first 10 minutes of the trading day. So the stock gave us the exact scalp trade that we were looking for within the price target identified in the email that went out to traders before the market was even opened for business. The stock now is trading higher. I'm going to take this up to a 10-minute chart. Actually, we'll look at the daily chart because you can see the second level, which was $88.95. The stock is approaching 88 as I make this video, and there's a fair chance that we're going to get another trade out of the same stock. If this stock should get up to $88.95, we should get another price reaction in the other direction, completely willing to take that trade if it gets there. In the course, traders learn exactly how to calculate these price levels where the stocks should have their price reaction in the other direction, and it does happen the majority of the time. The other thing traders learn that's extremely important is why these price levels are important. Once traders understand why these price levels are important, they have a different outlook on the trade, and it takes some of the emotion away from the trade because they have more confidence that the price level should provide a price reaction in the other direction. That changes the scope of how we trade. Confidence is an enormous part of trading, and if you can understand why certain price levels are important, you gain an enormous amount of confidence in taking these trades. Come over to Lazy Gap Trader, learn everything you need to know in order to trade the gaps successfully day in and day out. It's a fantastic opportunity for traders to build a foundation on a strategy they can use for the rest of their trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.